Hello everyone, welcome to Current Economy and Investment Insights, today being July 15th, 2014. Paul Munichel is with us from Wells Fargo branch in Palos Heights, and we're going to be talking about what happened to the marketplace. My gosh, the market went nuts last week.
Yeah, I mean, we're not used to seeing down markets, and we got a bit of that last week, but thankfully, market's rebounding a little bit today. But let's review last week's market activity. We did see the major averages finish at least higher on Friday. The Dow gained 28 points to 16,943, and the S&P 500 rose 2 points to 1967, and the Nasdaq added 19 points to 4,415. Stocks spent most of the day on Friday toggling between gains and losses before second quarter earnings season ramps up this week. There are 130 companies in the S&P 500 due to release results over the next 2 weeks. Wall Street estimates project earnings growth of 6.1% and revenues to rise 3% for the benchmark index, and that's according to Thomson Reuters. 8 of the 10 S&P 500 sectors closed in positive territory. Industrials and telecom were the best performing groups. GE jumped 1.3% to 26.55. Shares of Verizon rose 1.3% to 50.28. Technology stocks also advanced, led by Facebook's 2.2% rally to 66.27. Losses in energy and utilities limited Friday's gains. Chevron fell 1.3% to 128.51 after the company said its second quarter production will decline from a year earlier amid lower output overseas. Shares of Exelon dropped 1.7% to 33.78. Overall profit-taking pushed the major averages lower on the week. The Dow finished with a weekly loss of 0.7%. S&P 500 declined 0.9%, and the Nasdaq fell 1.6%. New York Stock Exchange composite volume totaled more than 2.6 billion shares. On the New York Stock Exchange, advancers beat decliners by 11-9 on issues and 8-7 on volume. The Nasdaq was even on issues and 7-5 positive on volume. Treasuries continued their recent winning streak. The 10-year note rose 5/30 seconds to yield 2.52%, and the 30-year bond gained 18/30 seconds to yield 3.34%.
And we have a new script coming in from MarketWatch on the current economy that was reported this morning. The U.S. stocks, Dow topped 17,000 again this morning. And they're also reporting the U.S. stock market gain, pushing the Dow Jones Industrial Average above 17,000 this morning, Monday, as investors welcome better than expected earnings. And from Citigroup, a flurry of mergers and acquisitions. The banking heavyweights profit topped estimates even as it reached a $7 billion settlement with the U.S. Justice Department over shoddy mortgage-backed securities. Shares jumped 4%, and that's all with Citigroup. The S&P 500 opened 10 points or 0.5% higher at 1977.50. The Dow Jones Industrial Average added 100 points or 0.6% to 17,041.38. The Nasdaq Composite began the session 25 points, and I think it's at 0.6% higher than 4.40.55. The MarketWatch live blog today, Stock Market Action, reported that the pace of the second quarter earnings season will move into high gear this week, with results due from large companies in the financial and technology sectors, the two largest sectors in the S&P 500 index. The banking sector, according to Bloomberg, and evaluations are going to remain the main focus for this week, as we will get earnings from some of the biggest tycoons of from Wall Street. according to Niam Aslam, chief market analyst at Ava Trade, in a note. The expectations are high. The investors are hoping that these earnings will cement the optimism that growth is on track in the U.S. and the revenues are healthy. Paul, there is, from any record, no meetings going on with the Federal Reserve, but they're meeting with Congress. Do you know exactly what that's all about?
No, I think we're going to just hear some comments on state of the economy, possibly reiterate interest rates and what the Fed's outlook for inflation is. That's really what they're keeping their eye on, is inflation, with all the bond purchases they've been doing. Even though they're tapering, everyone has got that in the back of their mind on when we'll start to see inflation creep into our economy again.
Well, according to Market Watch's live blog, also, the investors, it was reported, the investors welcomed a strong employment data, but decided the subdued wage growth means the Fed won't speed up its timetable for ending its unusual loose monetary policy. While the slack in the labor market is tightening, wage growth is still contained. This means that companies are still able to keep their profit margins. As the ISM numbers indicated, service sector growth is slowing slightly. Markets would like to see economic growth without a jump in inflation, and that is a hard balance to keep, according to Quincy Crosby, market strategist from Prudential Financial. The U.S. economy added 288,000 new jobs in June, and the unemployment rate fell to 6.1%. Meanwhile, weekly jobless claims, a proxy for layoffs, ticked up 2,000 to 315,000 in the week ended June 28, hovering near a prostration low for several months. And the labor market, according to the labor market, sorry about that. The U.S. benchmark oil futures fell 57 cents to $103.91 a barrel. Paul, is there anything that you'd like to add to all this? I'm stumbling with all my words because of the script that they sent me, and I'm doing the best I can.
Oh, you did great. I mean, there's not a whole lot of economic reports coming out this week. Really, its earnings is going to be in focus this week, as you mentioned. You did mention that wage growth is under control, and we haven't seen a whole lot of wage increases by the companies, and that helps to keep inflation in line, because that's really the type of inflation that the Fed likes to control. So when we see wage increases, and we haven't seen that yet, which should mean there's no real inflation coming anytime soon. You mentioned the oil prices, and it's unofficial, I guess, but I heard on the radio this morning that price of gasoline in Illinois is no longer the highest in the country. In fact, we've slid way down the scale, which is at least nice to hear for once, that we're not paying the most of anywhere in the country for gas right now.
Right. I made a trip up to Wisconsin. I mentioned this, I believe, last week, and there's a 30-cent differential between Illinois and crossing the border into Wisconsin, and I'm sure it has to do with taxes and things of that nature. But you're right. The price of gasoline has dropped substantially, and it was certainly a nice thing to see on the signs going by the gas stations and pulling in and filling up your tank, and not costing $80 to put gas in your tank. Maybe it's only $60. But anyway, it's
still too much.
It's still too much, exactly. Well, stay with us. We're going to be back with Investment Insights. Paul has a interesting topic. If you have any interest in gifting to your family or lending to your loved ones, listen to some of the stories he has to share with us. Stay with us. Okay, we're back with Investment Insights, and today we're going to be talking about lending and gifting to someone in the family that may be in need of assistance, financial assistance. And Paul's got some tips for us. And Paul, we're willing to listen to what you have to say.
Thanks, Ron. Lending money to friends and family members, it's common. And according to a survey by the American Consumer Credit Counseling, believe it or not, 82% of people would lend money to a family member, and 66% of people would lend to a friend. But that doesn't mean it's risk-free. Not only is there a chance you could lose your money, but you may also put your relationship with the borrower in jeopardy. You can help manage the mixing of money with the people you love using these 4 tips.
Well, Paul, if I was lending money, I certainly would like to know what that money was going to be used for.
You're no different than most people, Ron, and that is the first tip, is to flat out ask what the money is for. Instead of automatically responding sure when your brother-in-law or any relative asks for a loan, take a step back and gather some answers. Ask what the plans are for the funds. How you respond is likely to differ if it's to take a class for a career advancement versus going on a trip to the Bahamas. And when it comes to posing questions, don't let yourself off the hook. What is your motivation for wanting to get involved? Only you can decide whether you're doing it for the right reasons. Just make sure to dig deep and give it plenty of consideration before saying yes.
Well, the one thing, when you're dealing with a family of friends, and it's probably best to understand the terms of the loan as well. Make sure that's well understood.
That's very important. Oftentimes we'll hear people feel that it's awkward to discuss the terms, but that could lead to hard feelings down the road when one party assumed one thing and another party assumed the other. So, yes, the second point, Ron, is you want to be very clear about the terms. So after you decide to make the loan, you need to talk terms. Don't be tempted to ignore or pass lightly over this step, even if you would rather avoid the uncomfortable formalities of hashing out specifics. You will likely save yourself a lot of misunderstandings and conflicts down the line if you work through these questions. What's the exact loan amount? Will it be conveyed in one lump sum or installments? You could ask, if it's installments, what's the timetable to pay those installments? You're going to want to discuss if there's any interest you're going to charge. How will payments be delivered? Cash, check, or transfer? What's the payback schedule? And you may even want to go over how you will manage late or severely delinquent payments.
Paul, are there implications for tax when you loan someone money? And I know there is a limit when you do gift.
You're right. There's definitely limits on gifting because we've done shows on that specifically, right. And there can be tax implications. So if you loan the money at a very low interest rate or without any interest at all, the IRS will assume the amount is a gift, not a loan, and that may carry tax consequences. As you mentioned, Ron, in 2014, you can give gifts up to $14,000 a year per person without triggering any gift tax implications. The interest you waive may also qualify as a gift. So to avoid these issues, maybe consider charging interest at an applicable federal rate, which the IRS updates monthly and makes available on irs.gov. In addition to talking with your financial advisor, make sure to check in with your tax advisor to help ensure you're clear about how transferring money might affect your tax bill.
All right, Paul, you talked about 4 steps, and up to this point we talked up to 3. What's the last step?
The last step is to regulate the payments, the repayments. So you want to be sure to set reasonable and attainable repayment terms. If there's interest involved, an online calculator from a site such as Bankrate, which is bankrate.com, can help you break down the numbers so you and your borrower can set a manageable repayment schedule. Also come up with a way to track repayment. Keeping track of all this information may sound like a lot of work, but remember that when a loan is handled with care, both parties stand to benefit.
All right, Paul, again, we're going to put your number at the bottom of the screen. If there's any question about these 4 steps you talked about, if you can guide the person if they call you, they do not have a financial advisor, we'll give them your number and maybe you can take it from there.
I mean, it's a sensitive issue. I mean, everyone has probably been in a situation where they've been asked to lend money to a family member or a friend, and unfortunately in a lot of those situations they turn out with hard feelings and arguments and people losing that friendship or that family member. So these 4 simple steps, although may seem a bit awkward to discuss before lending money, if followed properly, they do avoid a lot of those arguments.
Okay, Paul, you have compliance that you have to share with us.
I do. Because we talked about taxes today, I have to remind you that Wells Fargo advisors are not legal or tax advisors. Our typical disclosures, investments, and securities and insurance products are not FDIC insured, not bank guaranteed, and may lose value. And Wells Fargo Advisors LLC, member SIPC, is a registered broker-dealer and separate non-bank affiliate of Wells Fargo and Company.
Okay, very good. Thank you, Paul, for covering this topic. This is very interesting. For Paul Munichel with Wells Fargo and myself, Ron Jankowski with Channel 4, we wish you a good day.